Okay. What's up, YouTube? How you doing? Let me slowly turn the music off completely over here. How are you doing, YouTube? What a day. What a day. I do know that many people did not get a notification because I actually have a second YouTube account and I subscribe to myself just to check if we get notifications or not. So let me quickly tag our Discord friends and then we go live. Traders. There we go. Okay, what's up, YouTube? How you doing? It's been a crazy day, of course. Price moving to the upside and then immediately to the downside again. John-Lou, welcome. Good to have you here. Thanks for sharing. Well, I didn't share anything just yet. You know, I might just close the stream and pop out again, but that's not how we do, right? We're gonna hang out for about an hour because then I have to go into the gold live stream today. Yeah, we're gonna check what this price action could mean from an Elliott Wave perspective. Of course, it's not easy to count the wave itself, but it can give us a little bit of an indication of the possibilities, right? What might be next. Errol Suleiman, welcome. Good to have you here as well. Good to have you guys here. Now, for everyone that's hopping in, I do know you did not get a notification, as far as I know, because I didn't get one on my second account. I'm always checking with live streams because, I upload 3 times a day, which means, and you're only allowed to upload and you're only allowed to notify people 3 times a day. But it has to be exactly in a 24-hour window. So if you upload a video at 7 a.m., the next video has to be around 7 a.m. as well, and 7 a.m. And then I do 7, 1, and 7. But now I'm an hour early because I do the live stream. And that's why I think the notifications are not coming through, because I'm an hour before I usually upload a video. So just for your information. Now, in this live stream, of course, we go through the different scenarios that I have, different ideas of what this move is. It's been a crazy day, of course. Crazy day news related, right? It's basically a big news pump. I think it was Cointelegraph that wrote something about the ETF being approved, and then it was lies and fake. And yeah, it's I mean, whatever the news says, I enjoy the volatility, which is always nice. Thinking about that, what is this showing actually? I didn't even look. This is last week. This week, okay, only Thursday 6 p.m. we got some news. Okay, that's interesting. But yeah, of course there was some stuff going on, which is very interesting. Now, in the previous 2 videos, and of course throughout the range, I highlighted some resistance areas above, which has been tapped. Or both of these have been tagged now, big time, before then a massive move to the downside. So what we're going to do is we go through the high time frame, because this is quite an interesting move, and then we're going to zoom in. Now, I can already tell you that if we go to like the 15, it's pretty difficult to get a good idea of what's actually going on with this pump. But when we zoom out, we might get a bit of a better idea. So that's what we're going to do. We start on like 12-hour over here. And let's go through this price action. And then at the end, I'll be sharing my thoughts, right? And you'll figure out as well what my thoughts are, basically. And what I think of this pump. So Nick K, welcome and good to have you around. Christian as well. Hello, guys. Hello, Christian. Welcome. Good to have you here. Turn off the volume of the chart, of course, not of my mic. And clean the chart. So let's go through some of the content. What's happening here? Oh yeah, I haven't opened this folder for a while, but support resistance areas, you can keep it simple. I think these were daily and 12-hour support resistance areas. Yeah, not bad, eh? Not bad, well respected. But that's not what we're going to talk about. Just interested. Okay, let's start here. Sophos, good to have you here as well, man. Sophos 1990. You're probably 2 years older than I am. 33, I guess. Maybe still 32 if your birthday is in December. or November, or the end of October. Okay, let's get this party started. So high time frame, and we're going to be zooming in, or at least we start on the 12th hour. That's where we're going to start. So is the stream breaking up? That's a good question. I don't have any, it's an important question that I have to address. I don't have any lag spikes so far. So I do think it's on your side. It says excellent connection and no missed things. So thank you, Goran. Welcome, man. I appreciate your comment. Okay, chat, I'll be coming back to you guys. Let's focus on the analysis, and then we go into chatting till around like 7 p.m., like 50 minutes, let's say. So AE and John-Lu, thanks for your reply. So first of all, there's like two flats that have a possibility in the bullish scenario, right, on the medium time frame. I will go into the probabilities while we go through the scenario. So not only at the end, but I'll talk about probabilities while we go through it. I do think it's important to address for newer people that in Elliott waves, you always need a bullish and a bearish scenario on each time frame. But depending on the amount of rules that are respected and the scenario, you can estimate the probabilities, or you at least know what your preferred and your alternative scenario, right? So this scenario here is the bullish scenario, which is a flat scenario. 3 waves in A, 3 wave B, 5 wave in wave C, where this exact flat is a running flat, as this is then the low of A and C when below the low of wave A. Most common target area of C has been hit, which is taken from the high to the low of A to the high of B. All good, all nice. The problem here is this wave B, because this wave B over here is a flat by itself. So this is a flat inside a bigger flat. And based on the newest probabilities and rules of Elliott Wave International, which are like the IP holders of Elliott Waves, and they also write the books and stuff, a flat in a wave B of a flat, so a flat in a B in a bigger flat is officially not allowed. That's what they say. It's just what I always say is it's very low probabilities, because based on some statistics from Swennel, for the people that know, links are in Discord as well. Let me actually show you guys so you know where to find this information yourself, which is shared in the Elliott Wave section. So here you can go statistics from Swennel, famous guy. You will see that sometimes it can happen that you get a flat in wave B of a bigger flat. It's just extremely rare, which therefore means probabilities are not really on the side of this particular scenario, right? Now, the other scenario from a flat perspective is that this is your low, right? And then you have this as an ABC. Now, besides wave B being pretty weird because it has to be a 3-wave structure, the problem also is that this now is a running flat, where wave C did not take the low of A, which is very rare. A running flat is the most rare pattern in the flat family. Expanding flat is most common, which is then A, B, C. Then you have the running flat, A, B, C, but it's more like almost a horizontal structure, and then you have the running flat. So yeah, not great. Wave B preferably is part of the zigzag family. And of course, you can have a wave B being part of the zigzag family if this is your low of A, where this is then your zigzag. But this being a wave A, B, and then this is your little C, incredibly rare, as the most common targets for a wave C are far, far above, and even the rare minimum targets are far above this little structure. So yeah, not looking great. Besides this then being a running flat, it's also not that amazing. But if we then at least look at the more bullish structures locally, I will go through bullish and bearish at the same time. So of course, bearish scenario, let's go through the bullish and bearish per time frame instead of how I do it usually. So the bearish scenario is that the low is not yet in. So 5 waves in A, 3 waves in B, looking for eventually a wave C to the downside. By the way, I have to adjust my box here based on the price action we had today. Ta-da! Because I didn't change it yet, so yeah, there we go. This works. So we're looking for a zigzag, right? 5 and then eventually 3, 5. And the most common target for a wave C is between the 1 and the 1.236, which now moved up to 23.4K to 21.9K. And if I open my target boxes, which is additional support resistance, for the regular viewers here, you guys know it's often very well respected, or at least we get some support, some reaction, 21.8K to 22.6K. Now, what is also nice about this area over here is that the wick of Bybit over here, because Bybit has a wick, which I don't have on the Coinbase chart, and many other charts do not, but Bybit has quite a big wick to the downside to 23.6K. And based on statistics, you can go to the Bybit chart and you can just look at the chart yourself as well. Based on statistics and historical price data, it's no guarantee for the future, but price tends to fill these type of wicks. So over here, you have a wick, 3-wave move down. Let's see if we can find a quick other one on the 12-hour chart. Here, another one, 3 move, eventually down. Here we had a wick, 3 move down, and you can just go back through the chart. Here, another one. 3 move down. So it's just statistics, right? We don't know what price is going to do, but based on statistics, it makes sense for Bybit to fill that wick. Now, of course, we also have a wick to the upside, but I'll talk about that in a second. So in this scenario, we have the wick of Bybit, but also a double bottom over here. And it's actually quite rare for a double bottom on this high, like time frame, 12-hour chart, daily chart, to not get taken, as there's quite some liquidity over here. And you can imagine that if price would move to the downside, people might get quite scared if price at least moves down heavily, right? Which is interesting, because the more scared people are, the more they sell, the more bigger positions can fill their long positions to draw price to the upside. So we will go over the head and shoulders pattern in a second. So basically, which, by the way, the head and shoulders pattern is in relation to what you see over here. So I'll show it now, just now. So in this scenario, we're then looking for 5, 3, 5. So 3 waves in wave B, where the most common targets of wave B, it's a very big range between the 382 and the 886. So the golden pocket here being hit with the wick is absolutely normal for a wave B. It's a very common target in general, the golden pocket, and it has now been tapped over there. So eventually, what we want to see is a wave C to the downside. The question mark remains, is this it? Is this the high, the fake news, and maybe with a bit of a retracement back up, test it again, and then a move down, right? We will go into the lower time frames in a second, where I'll explain my thoughts there. Now, this scenario indeed, and it's actually funny that the Jägermeister talks about this, is I have 2 psychology scenario folders that you cannot see. Here they are. Psychology scenario 1, psychology scenario 2. They are basically in relation to one another. So this psychology scenario, as I like to call them, is basically like fake out scenarios. But these are scenarios that fake out usually trend lines and patterns, which of course are things that many beginning traders or people that haven't really necessarily studied too much, that they use. And you can use these very, very profitably if you build a system and a strategy around using trend lines and patterns. They can be incredibly profitable. But of course, in general, when you're just starting, you will also notice, or people in general, you will notice that there's many fake outs. And that has to do with psychology. So that's why I call them psychology scenarios, where I was like, what if, when price was ranging here, what if we can break the trend line, move up, but then eventually move down? And all the longs will be baited, will be stopped out when price moves down, which then leads into the head and shoulder scenario that the Jägermeister mentions, where you have over here left shoulder, head, right shoulder. And what's nice here is that instead of going to the target of the head and shoulders pattern, which is over here, the low at 17.7K, taken from the high to the neckline, and then you just pull it down. Instead of going all the way down, you dip below, but then you go back up. So people that are shorting the breakout, they get stopped out because price then moves back towards the upside, right? Another big problem for people usually is taking profit. Where do they take profit, right? With this scenario, so this one, probably they're aiming for this high. But did they already maybe take a take profit one or not? Well, usually, people try to hold, get the maximum amount of profit. So moving down can lead to a stop loss escalate, right? Like it can go very, very quick. Same here if you move back to the upside. And of course, you would take the double bottom in this scenario as well. So we went over bearish and bullish on the 12 hour. Let me go to the 12 hours. So now let's have a look then at this structure. Because if this is the low, then we want to count bullish structures to the upside. And there's 3 structures that you have to think about. You have the impulses, 1, 2, 3, 4, 5, where wave 1 and 4 are not allowed to overlap. If they do overlap, you have to think about a contracting diagonal or an expanding diagonal, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, right? And lastly, you have the double 1, 2. And 1, 2s are basically most commonly diagonals. 1, 2, 1, 2, 1, 2. But then it pushes up. Instead of in a leading diagonal, you have 1, 2, 3, 4, 5. Then you get a big retracement. And then you push up. Because this is your wave 1. This is your wave 2. And then you go up for a 3. That's the difference. Usually in a double or triple 1, 2, you also see some nice bullish CVD divergences building up. So let's then zoom in to, first of all, this structure. And I spoke about this one in already for a while now, of course, where we have then 1, 2, 3, 4, 5, right? Target area for wave 5 between the 1 and the 1.618, between 29.1 and 30.7K. Big wick, very, very nice. Area of interest has been hit, which now also means that this invalidation has to move to the downside, because if price would now move below 4, this can be a wave 1, 2, and then you go up for a bigger wave 3, right? This is a leading, expanding diagonal. Has to be said that any expanding structure in Elliott waves is not common. It's a rare occasion that you get expanding structures, expanding triangles, expanding diagonals, but it is something to keep in mind. So 1, 2, 3, 4, 5, 3 is longer than 1, 5 is longer than 3, which is nice, right? That's what you want to see. Wave 2 over here retraced to the 0.5, less common target for a wave 2 in an expanding diagonal. Wave 4 to the 786, which is a common target for a wave 4 in an expanding diagonal. But what is also important, and I'll go to a scenario, Card, are you here? Crypto Card? I wonder if he's here because I'm going to show his chart. The most common target for a wave 3 in an expanding diagonal is, let me find over here, oh, that's contracting, is between the 1.272, 1.38 and the 1.608. So this area, that's your most common area for a wave 3 in an expanding diagonal, which clearly has not been hit. As you can see, the 1-to-1 has been hit, which is a target because that's a minimum target, as wave 3 has to be longer than wave 1. But as you can see, it's a less common / rare target for wave 3 in an expanding diagonal. This is your most common one, which then leads us to, hey, wait a minute, if I put this to the right, we now wicked into this common target area. And if I quickly show what Card posted in Discord earlier today, he said, hey, what about this scenario? 1, 2, and then you have a big ABC in a wave 3. So all of the waves are then zigzag structure. Zigzag 1, 2, 3, 4, 5, which is possible in a leading diagonal. A leading diagonal can be a 5, 3, 5, 3, 5, or all the waves can be 3 wave structures in a zigzag, or at least a zigzag family. This is definitely a interesting scenario. The only thing we have to think about here is time. This wave 3 is incredibly long compared to wave 1 and wave 2. Just by eye, it's probably 3 times longer. We can actually check it. So if I remove this quickly from my chart, put his count over here, 1, 2, and then we have 3, 4, 5. We use a fib time from the low of 1 to the high of 1 to the low of 2, which is going to be even more than 3. And we use the extension, oh no, it's about 2.5 to 3 times longer in time than wave 1, which is quite a difference between a 1 and a 3. But it does not necessarily invalidate the scenario. So it's definitely an interesting scenario, but time is not that great. But then again, this scenario here, wave 3 is not that amazing. But hey, expanding diagonals in general, it's a bit of a mess, right? So anyway, wave 5 to the upside, inside the target area here for wave 5, you take it from the low of 2 to the high of 3 to the low of 4. And the minimum target is the 1-to-1. Usually the maximum one is the 1.618. And if I then show you here, wave 5 expanding targets, then here you go, right? I overlay it. Then you can see the most common target area for a 5 has been hit in this particular scenario. So that is very nice indeed. And inside this target area, we of course had my additional target boxes. So the resistance areas, which played out nicely, then they are now turned white because they have been tagged. So the resistance in that area has been like tapped at least once. So that's why I turned them white. The blue ones are still untapped. So this is an interesting scenario, right? Which would lead you to believe this is then the low, 1, 2, you're going to be looking for a move up. Now that we have a potential, never know, always probabilities high, you take a fib from the low to the high of the potential end of this first structure, toggle on your wave 2 target areas, and then you will see the following, which might be a bit messy here. So let me remove this. Most common target area for wave 2 is between a 0.5 and a 0.786, right? Which is between 27.4K and 26K. Now let's open the support areas, see where we have some confluence, and then you will see that the golden pocket is in confluence over here with a small little target box, which contains a daily and a weekly naked point of control between 26.8, 26.9. And then the 786 has some target boxes around it, over here, down here, 26.2, 26.3, and then we have 25.7, 25.9. By all means, if this is a wave 1, you do not want to see this low being taken. The invalidation, 24.9. Actually, it's interesting, so let me put this in my folder. I can use that in the videos later, right? So then you expect a wave 3 to the upside. The 382 is less common for a wave 2, and the 886 is also less common, right? So the 786 to the 05 is the area of interest. Now, if we look at this scenario here from a bearish perspective, then we got to the same area of resistance, right? So both the bullish and the bearish scenario had this area of resistance. So once price was pushing to the upside, you could keep an eye on what was happening over here. Of course, everything went incredibly quick, right? It was insane how quickly this went. But in general, the target areas were hit, and we got a big reaction from the target areas as well, which is very nice. Now, in this particular scenario, it's a bearish one. We look for a 3-wave structure as we have a bigger ABC. Remember, looking for a move down, fill the buy bid wick down here as well, or the one here. Where here we're looking for a 3-wave WXY. Either a flat W, X, and then Y being a zigzag in an ABC, where this is then your most common target area. Between the 1 and the 1.236, very nicely respected, as you can see over here. For then a move to the downside. So in this scenario, preferably you're not going to take this high. I will mark it at least as an invalidation, because definitely if you go above here again, probabilities to move to the next resistance area and then go quite far out of the target, it's not really what you want to see. So we have the bearish scenario and we have the bullish scenario with the same target. So what does that mean, right? We got to wait for a range. This is the bullish scenario is an expanding flat, which like in general has low probabilities because it's very rare expanding flats. And the bearish scenario, from if you put a WXY against an expanding flat, the WXY will win in probabilities. But what's most important is that after such a big structure, we're going to be waiting for a range. Price can easily still range its way slowly to the upside and go here, because if we do zoom in and you take a fib from the high to the low that's made at the moment, you can even see the golden pocket let me remove this. The golden pocket here, 618, golden pocket 66, is on top of this white target box, which is a common target area in general. And also for a potential move to the downside in an ABC, if this is your high of B, and you're looking for a C to the downside, it means you want to start with an impulse. So you're going to be looking for a wave 1, 2, 3, 4, and eventually a wave 5, which means that very, very locally, a wave 2 retracement is a possibility. And as just explained, if this would be a potential wave 1, of course, we have to wait, right? It's way too early to call because we have like almost no information. But just if you would look for a wave 2, the most common target area is the 05 to the 786, which includes this target box as well. So it's now all about patience. Doesn't make sense to do anything here. In my opinion, it's all about patience and see what price is going to give us. Give it a bit of time, give it a bit of a range, and eventually it will clarify itself for us. Now, if we zoom in though, so we had all of this. Let me have a look. Yeah, this is the bullish. That's another one. Because we are not finished yet, we are zooming in slowly. Go through the probabilities. So WXY against an expanding flat will always win in probabilities. And on the 12-hour, right, the flats versus the ABC zigzag. At the moment, the zigzag for another move down based on Elliott waves has higher probabilities. Of course, this constantly changes based on new information. The higher time frame will change slower than the lower time frame, but that's why I update you guys 3 times a day, right? I provide you with 3 videos a day just to make sure we're always up to date with the newest probabilities, newest stuff. So if we then have a look here more locally, that scenario is not interesting. Let me have a quick look here, because of course I did not change any of my oh wait, this one is invalidated. I can remove this. That is very nice. So that saves me 1 folder. Quickly clicking through. Okay, we go to the lower time frames. So in this particular scenario, we have a 3-wave to the downside and a push up, right? This has to be a 3-wave structure. We had an ABC previously over here, but I removed the folder as that was quite clear. So we had over here an ABC hitting the target area of a wave C, again, taken from the high to the low to the high. And then between the 1 and the 1.236, right? Target reached. Now then we move to the upside, and if we look at an impulse, on my side the stream should still be good. So if other people can just check in with me, that would be very nice, or check in with Gigi. But it says for me that it still works. But in this scenario, what is interesting is, of course, we had a potential, that's a bullish scenario. Okay, thanks, Christian. The bullish scenario was a double 1-2, 1-2, 1-2 liftoff. I'm not, and I, it's just a feeling thing. I don't necessarily like the double 1-2 here too much. Not because I don't like higher prices, because of course I do. I also like lower prices because I don't care if it goes up or down. I trade the volatility. But from an Elliott Wave point of view, this double 1-2 over here it's not great. Preferably a double 1-2 is 1-2, 1-2, 1-2, potentially even a triple, and then you lift off, right? Where the second wave 1 is shorter in time and price, or at least in price usually, than the first wave 1. So the blue count is your higher degree Elliott Wave count. That's your first 1 and 2. And this is then your lower. The white count is your lower degree Elliott Wave count. And then potentially in a third one to even lower, right? So you expect a lower degree Elliott Wave count to be shorter in time and price compared to a higher degree Elliott Wave count. But in this case, the second wave 1 is longer in price than the first wave 1. And the second wave 2 is almost getting close to the length in time of the first wave 2. So that's not really that great. There is still a possibility this is a 3-wave structure to the upside as well in an ABC instead of a 1-2-1-2 continuation. And the probabilities for this might increase the fact that this wave 4 over here retraced very deep. Because after this is then a 1-2 in a second 1-2, right? We are looking for your wave 3. Now we then have either this wave 3 is in, wave 4 is in, and your white 5 is in, which if that is the case, you're now looking for a blue wave 4. First of all, blue again is the higher degree Elliott wave count. A higher degree wave 4 tends to retrace to the lower degree wave 4, which is this area, which is literally where we are right now. However, there's always this however, if you take a fib from the low to the high, and I toggle on my wave 4 targets, then what you can see is that with this red candle to the downside, so the sharp move down, the 0.618 is hit. The 0.618 is incredibly rare for a wave 4 retracement. The 0.236, 382 and the 0.5. These are your most common target areas for a wave 4. And I pulled it from the blue low to, or the blue wave 2 to the blue wave 3. So we are checking a retracement for a blue wave 4, which reached the golden pocket, which for me always it invalidates a wave 4 most of the time, like 99.99% of the time it's a wave 4 invalidation. So yes, we are still hanging around the lower degree wave 4, which is like the safe and grace, I suppose, quote unquote, for still a potential wave 4, but it did hit the 0.618, which is not ideal, right? But far from ideal. Now, if you would say, okay, but what if we still have wave 5 coming? This is your 3, and then you have this as a wave 4. Well, then the problem is only larger. Or actually, I mean, it doesn't change. It's just your pivot here is even higher. So the 0.618 is a little bit higher, and as you can see, has also been tagged, right? So not what you want to see for a wave 4, which lowers the probabilities that the move down here is a wave 4 for then another 5 to the upside. In other words, the probabilities that this is at least a temporary high for now are higher than price going all the way back up and taking this high at the moment. It's probabilities, it's, you know, no one knows what price does, but based on probabilities, this being a wave 4 has low probabilities, meaning a wave 5 up has low probabilities, meaning this is likely either the beginning of an impulsive structure to the downside, or this is corrective, where you expect at least a bigger range to form, like a more sideways structure, before coming up. And that's why I always say as well is, once you get very, very impulsive price action, you want to wait for ranges. Let the chart talk to you, right? Let the chart talk to you, wait for a range, because the moment that a range starts building on the chart, that is when we start to get clarity on, hey, how is the range forming? Is it an ABC, WXY? Is it a flat? With that information, what CVD divergences can we spot inside the range as well? That is yet to come, right? And then based on that information, that is when we can get probabilities again for moves up or down. But at the moment, this little dot over here on the chart is not interesting to count at the moment, because it just fell down immediately after reaching these highs. But at least you get the probabilities, right? So the probabilities, wave 4, very, very deep retracement, but it is still at the lower degree wave 4, which is your safe at the moment. So it's all probabilities. You can get a wave 5, but from a Elliott wave perspective, reaching the 0.618 is incredibly rare for a wave 4, lowers the probabilities. No? The bearish scenario, well, this was, what's that quote in English where they say, no? I forgot it. I wanted to say something. That has aged well. That aged well. That was it. So wave C, this being the high of your wave C, that aged well. because in a video, I will go over that as well. So we could expect this bounce up, by the way. Not that it was so impulsive. However, based on what we saw locally, the probabilities increased for a move up. And I will explain why, because it has to do with these two folders that I have over here, as well as this volume profile. But more about that in a second. So this move can still be an ABC, which means it would be finished. I gotta quickly have a little look at this being done an ABC, because of course wave C is incredibly high. And this was one pool. Of course, I didn't do any analysis before the actual live stream. So this can definitely be a three-wave structure. Nah. Not happy with an ABC though. So I'm going to remove this from my chart. So basically the bullish and bearish scenario is the same. You want this to be the end of a move. But if this is your wave 4, low probability. So there's a higher probability that the high of 5 is in. This can also still be a 1, 2, 3, 4, 5. It's difficult to count. That's the problem with the news. But in general, and that is most important, if we are looking for an impulse move to the upside, wave 4 at the moment, not a high probability, right? So we have to wait and see what the range is going to give us. And then based on that, we can get to the next steps. Because if we zoom out, for an expanding diagonal, preferably, this is your high. Of course, you still have a little bit of upside left in the box. But you know, this is quite an interesting high. And for the bearish scenario, you preferably also have this as a high. And the fact that a wave 4 has such low probabilities, and it increases probabilities that this is a high for at least like the upcoming couple of days, one can imagine, after this impulsivity. Now let's talk about the expectation of price moving to the upside. And this is something I explained in the previous video, the 1 p.m. update. So locally, first of all, we had the volume profile of this range. Poof, there we go. So the volume profile of this range. And we went from the lows over here, resistance, resistance, move up, bam, straight to the value area high, and we moved to the downside. And once price was moving to the downside, thank you, Manoy Kumar, by the way, I appreciate your thinking. Once we moved to the downside, there was one or actually two levels to pay attention to, and those are these horizontal levels. Because we had a very big push through resistance, this white box, so let me remove this. And then what you have to focus on during these type of pushes is the gap that you get. Because this is then an inefficiency. And this is the 5-minute gap, and I also have the 1 minute. But let's go over the 5 minute first. So on the 5 minute, you can see you have a very big push. Then you get over here a little order block, little candle, red, move up, and then eventually retraces down towards this area. This here is your inefficiency gap, fair value gap, whatever you like to call it, right? The first touch is often support, where you do expect a bounce. Over here it touched for the second time, but what is important is first touch, support, expected. If you come down again and you start closing candles below this area, probabilities are very high, you're just going to fill the whole gap. So the moment you would have seen that probabilities are high, you just go down all the way to 27.3K. However, price moved up, came back, retest, that's fine, no problem there. And then we started to move to the upside. And when you test the value area high for the third time over here, 1, 2, 3 times, besides, by the way, we hit the 886, which was a little hint as well for price moving up. So once the 886 is hit, you know that any potential move to the downside is going to be a wave Y or a wave C, at least higher probabilities for a wave Y or a wave C, meaning that the probabilities are higher, you're still going to move up eventually. So over here, third time value area high, blue line being tested, increases probabilities for it to break. 886 increases probabilities for the highs to be taken. Move to the upside. Of course, we cannot expect a move like this to the upside. I mean, I didn't expect it, but hey, I'm not complaining, right? It's very nice. So yeah, eventually insight into the resistance areas. So, you know, this is extra information, something you can look at whenever you see this. You also have the 1 minute gap, but the 5 minute was enough, where the low over here, right? This is your 1 minute gap. The thing is that this over here was not a red candle. I prefer to see a red candle after the gap. So on the 1 minute, you didn't have that. But on the 5 minute, you do over here. So on the 3 minute, it's the same as the 5 minute, the same area. So yeah, that gave you a little bit of a clue for price eventually moving towards the upside, where of course no one can expect a move like this. But hey, it's nice when you get it, no? So, what's next? Counting this is obviously not a great idea. You have a sharp move down, 1 minute time frame, very, very long horizontal price action as expected, because of course, great volatility up and down. So, like I said earlier, best case scenario now, or the best thing to do for an Elliott Wave counter like myself, is to wait. We had to move up, we had to move down. I don't care about this little bit at all. I just want to wait. I want to see what price is going to give me. And then based on the range, based on how price is going to form over the, maybe tonight or tomorrow, I can then get back into more local scenarios and get an idea again for the probabilities of whatever is happening over here. We are a little bit in the middle of nowhere. It's almost like a support resistance flip at the moment. So my feeling says that I would not be surprised if we are still going to see a touch of this white box. Maybe even the wick over here, as this is now, of course, like full of single prints as well for the order flowers here, probably. Let me go to the third. Yeah. So it would be quite interesting to test this area again. But once more, over here, there's nothing going on, right? Like I have no interest in this range. This is, by the way, this is the AGGR chart for CVD divergences. Everything is public. You can just first of all, check the video on my channel if you want to know more about CVD. And if you want to use CVD, download CVD, whatever it is, you can go to the Good to Know channel in Discord and download the one-pager, explain CVD, download my template, which is here, as well as the website. So it's all here. And also Dario made a Ethereum template, and I think also Solana. I'm not sure. I actually have to share that one still. But yeah, what you see is two lines, yellow, blue, for CVD divergences. And over here, we do have a higher low in price, lower low on the CVD, which is a bullish CVD divergence. But don't be mistaken. If we zoom in, you can see a lower high and a higher high on yellow. So it's a bit of a mess. So even using CVD at the moment, it's not giving you, or me, I have to talk about myself. For the scalpers, it might be interesting, but for me, I prefer using CVD on 15-minute time frames. It's not too interesting what is happening over here. By the way, what is interesting is that point, price retraced to the golden pocket of this range. I noticed at the moment in time, if you take a volume profile here, the volume pocket or the volume profile, the point of control has been respected perfectly, right? So everyone longing in this range, putting maybe their stop losses break even, hopefully took profit at the highs. If not, they got stopped at break even, which of course is not nice after a move like this. Don't forget to take your profit. Have a target in mind and respect the target. If you can take something off the market, it's better than nothing. So yeah, this is basically from the 12-hour higher time frame to locally what I'm currently thinking from an Elliott Wave perspective. On the higher time frames, of course, things are still not looking too great because you have all the expanding structures. Where from an Elliott Wave point of view, this being an ABC at the moment still has higher probabilities than this being the low. for different reasons. First, the Bybit wick, then the double bottom, and this structure to the upside looks to be then an expanding structure in this. And expanding diagonals are rare. In case you think about a double like 1 2 1 2, well, as explained earlier, if this is a double 1 2, then the second lower degree wave 1 is longer in time and price than the first wave 1, which makes it very low probability that this is a double 1 2, because the lower degree 1 is bigger in time and price than the higher degree 1. Same with the wave 2 as well. It's longer in time and bigger in price than the lower degree wave 2, which is not what you want to see. So the diagonal here is like the only, or less, it's almost like the highest bullish probability scenario, which by itself is not a high probability scenario as it is so rare. So we have to, observe what price does over here. But from an Elliott Wave point of view, at the moment, it makes more sense to have a bigger move towards the downside in a zigzag. And then, of course, zooming in, well, I explained that now. It's all about it's a patience game. We wait for the range to form. This looks like a proper high for either the diagonal scenario or the bearish scenario, right? And we have to wait on the retracement and the range to then get probabilities of, hey, we go up, we are bullish, or we continue down. Yes, it always goes down, up, and sideways, but the probabilities were from here already higher to move up, which we got now. So now as an Elliott Wave counter, you remain neutral. You're like, okay, we got the big move. We're going to wait for the range. When the range happens, then we can get to the probabilities of moving down impulsively or potentially continuing our way to new highs. That being said, let's chat with chat. How are you guys doing? Have you traded? Have you made profit? Hopefully you haven't lost. If you did, hopefully risk management was on point. So only 1% or 2%, whatever your risk appetite is. But how are you doing? Let me put you on the screen here as well. So Goran, yeah, thanks again. That's very kind of you. John Lou find me just joined. What about the head and shoulders? In my opinion, we just finished a flat with this expanding diagonal. Looking for an impulse to 23K. Okay, okay. So the expanding diagonal is in your wave C. So your whole wave. Okay, so what Stuba is talking about here, the short little thing, is that the expanding. So he's looking for an A, B, and this is your C. So expanding diagonal wave C. Now an expanding diagonal, if it's a ending diagonal, it always has to be 3 wave structures. So all of the waves have to be zigzags. That is important. Bit of a question mark if this is a zigzag. Doesn't really look like a zigzag on the lower time frames, but I do get eventually the conclusion is the same, right? If this is your wave C, or if this is a WXY, the conclusion is the same. You're going to be looking for a move down. It's just like the sub-degree count. Hopefully GG it's working again. Christian, I think this is wave B from the 31K high. So Mechi HK, you're thinking about a zigzag, like a 535 B 3-wave structure. Manoy Kumar, there he is again. Your explanation is great. Thanks. I hope everyone can follow. I try to explain it as clearly as I can, as Elliott Waves is very difficult material. All right, it's very complex, but hopefully with the folders and the clean charts, it makes sense to people, right? Blake, hey Blake, what's up? Blake always replies to almost every video. Quite insane. Hey Koenz, hope you had a great day so far. I did, actually. Went live the whole afternoon. Actually, I catch this live. So I was planning to do a live for Diamond, just chilling. And then we were half an hour in and then all of this happened. Pretty crazy. Thanks for your great analysis. It is very valuable as always. Wish you a nice evening. Thank you. Thanks, Blake. That's very kind. Hope you have a great day yourself. And have a great evening as well. So Blake, like you will most often see Blake in the comment section, chatting, right? But chatting in a positive way. Always good to see Blake. Same with Flotty, Daniel. There's many people that are visible in the comments, and I always see them coming back. Daniel, great live streams today. Thanks for attending them. Without you guys, would be pretty boring doing a live stream for no one. But thanks for hanging out. Let me I got to put on a light actually here as well. I got one of those monitor lights. Very, very nice. The Fish, how you doing, man? The Fish, what's up? The Fish is always in the live streams. Haven't seen a comment yet, but in the live streams, The Fish is always there. Good to have you around. Have you had a good day? I forgot your plan. I think last time that we were live on YouTube, I think you had I forgot your plan. You said what you were looking for. Holy shit, by the way, is the invalidation a perfect 30k hit? Huh. Talking about round numbers. I hope your take profit was not on 30k. That would be a bummer on the Coinbase chart, that is. Wow, it's a perfect 30k high on my Coinbase chart. How rare is that? To the cent. I just noticed. That's insane. Drew Jarvis, what's up? How you doing? Thanks for the update. My pleasure. Bybit hit 3,600. Did you say something about that? I think you wrote that in Discord as well. Let's have a look. Yes. 3,600. So what Bybit did is it took the high. Oh, it took the triple top. This is something that I remember this very well. So we had high number 1, high number 2, high number 3, a triple top on the chart. As you can see, they are lower. Interesting liquidity up there. And then price moved down, came back up, and we had like a potential idea of moving further up to take the triple top, which never happened because you just made a fourth one. But I mean, this was a great rejection. We had a target box here, wave Y, target area after a WXY, flat X, zigzag in wave Y, was very, very nice. Coming down, bearish CVD divergences, but we never took the liquidity here, which Bybit has now done. Now, same with the wick to the downside. This is pretty crazy because Bybit now has a wick over here and a wick over here. And again, most commonly, you're going to fill the wick based on historical data. This wick is older than this wick. But what I mentioned, what I can imagine is this wick being not maybe fully filled. Depends on the price action we get to the upside, because we do have the triple top. Let's see, 3450 on my chart. But we do have the target box. So it can always be interesting to range and whatnot and then move to the white box and then see what happens here for then potentially down or not. But then at least you partially fill the wick. And then you still have this one remaining, the one to the downside. I actually want to go to the weekly on Bybit. Let's see what's up here. How does the weekly look? On the weekly, it's not like this big wick here on the weekly. It's just that on the daily, it's very rare to leave wicks like this. Oh, there's actually not too many wicks on the weekly. This one also hasn't been filled. Not saying it. We could still come down here. I mean, it's 19.6k. I do have some support over here in this area as well. Very interesting area, by the way, for the A, B, C, or the bullish one, 1-2 liftoff. So you could fill 2 wicks, but over here, wick gets filled. Little wick gets filled here as well. Filled, eventually filled. This one was partially filled over here, not completely, but this wick itself filled the wick here. So this was quite a big wick on the daily. Then you went up, came down, you filled this wick. We had to wait for this one, eh? But yeah, actually another wick, fill. Oh, here, big wick gets filled 2 weeks later, 3 weeks later, I should say. So yeah, it's just statistics based on data. Price tends to fill the wicks, especially wicks that don't appear on other charts, because this wick on Bybit took this low. But on Coinbase and many other charts, let me go through them. Here on Coinbase, you can see we have a double bottom. This low has not been taken. If we go to Bitstamp, you can also see this low has not been taken. Let's see on Binance, the low is also not taken. And if we go to the index chart, the low is also not taken. So, it's interesting. And based on statistics, the probabilities are then higher to eventually fill the wick, so that all the charts take the same high time frame, high or low, and align themselves. So it's a full picture. J Mope was a nice short. I bet it was a nice short indeed. I hope you took it, man. Blake Gray, I actually don't chat much, but I like your content and I just try to provide your channel. I know that the algorithm needs comments. That's true. Everything helps. But thanks, man. Of course, no need to chat much or like long or short messages. Every little bit of support is very much appreciated. A like, a comment, whatnot, you know. And if people just enjoy the comment and the content and they don't want to like and that's fine, you know. I'm here to provide value, and if you think it's great, you sub. If you don't, then you don't sub. There's enough other channels online that maybe hopefully give you what you want, right? Every channel, everyone looks for something different, I suppose. So no, as long as the people that do follow the channel and watch regularly have value from watching, that's all I care about. It's like I don't even look at the numbers. Like I rarely look at the amount of subs, and it's just, of course, if you open Studio, you see the sub level. But since the very beginning, my content remained the same, and it's whatever people like. I never really look too much at the numbers. I just enjoy making the content. Bybit messing all the charts. Yeah, true, Drew Jarvis. It is, eh? Like the wicks on Bybit. I don't know, but it's nice because it just gives probabilities as well, which of course is interesting. Oh. Hasta la vista, Barbie, and there he is, or she. We don't know. Barbie, how you doing? 30K tagged to the absolute dollar on my chart, that is. Coinbase. Wow. You should almost make a screenshot of this. Farshad Farouk, welcome, man. Good to have you around again. Nice. Now I saw the market different ways because of your analysis. Now I saw the market different ways because of your analysis. Still, I'm learned a lot from you. Thanks. Pleasure, man. And that's what I like to hear as well. Like learned something, right? Besides an update, I try to make things a bit educational. And it's nice to hear, Farshad Farouk, that you picked up some stuff. And I'm happy to hear you enjoy it. My pleasure. 3,300. Wow, that's an insane entry. Do you trade order flow, Jay? The wick, yeah. A wick, by the way, is W-I-C-K. A little English thing. But yeah, the wick is it's a big one, eh? Beautiful. Sometimes crypto is just annoying to play. One moment the chart, it looks like it is going down. One moment later, it just gives you a mega green candle and completely screws up the game plan. Yup. Yeah. I mean, you can't see this stuff coming, right? It's just out of nowhere. Yeah, what do? It just goes up, immediately comes down again. It's from an Elliott Wave point of view, it's kind of difficult to really know what this wick means at the moment. But having this as an ending structure is a possibility. It's never too nice from an Elliott Wave point of view to finish on the highest volume if you have an impulse. Usually wave 3, 1, 2, 3, 4, 5. Of course, usually most commonly wave 3 is the highest volume wave. Another wave 5 to end a structure on the highest volume is possible in a wave C, in an A, B, C, that is common, where you have A, B, C in this wave Y. Then it is quite common actually that you finish on the highest volume. But of course, like what happened here is not like your usual way of ending a wave C. So we have to be patient now and wait for the range. What happened next in Bitcoin? Nadim Akhtar, make sure to go to the beginning of the stream because I went through the whole analysis from the 12-hour to the local price section. And I'm sure that will help you out. Majet Raptor, can you look at the high time frame? Can you look at HFT USDT? Well, I gotta say that I have to leave in a few minutes, mainly because I gotta go into the gold stream, but also, we kind of covered everything. And I usually do Bitcoin only. It doesn't happen too often. I go into other charts as I only trade Bitcoin. Andy, Bitcoin Census, Mr. Bitcoin, he's here. Good to see you around. Welcome. What a mess on the chart. Yeah. What a day, like crazy move to the upside inside the target areas, which is great, but an incredible wick and rejection here. So it's all about patience now to get a bit of a range and then get back into the probabilities of the different scenarios. So I look forward to a range to form in the upcoming days, and a range kind of means like a range between like 29.2 and 27.5, which of course it's quite a big range, but at the moment nothing is happening. We're just like here. So, but I do expect to at least fill this wick partially before any moves either up or down. I think it's still interesting to move to this 29.2 area again. But it doesn't have to do that. So I'm, just patient, waiting for a range to form, and the range will get us more clarity. I think the bullish divergences almost play out now. Higher low on price, lower low on blue and on yellow. Bearish one locally invalidated. But the target is taking this high, which of course is very close now. So, and now this is almost like one big inefficiency. Couple of resistance areas is there, or areas of interest, I suppose. And this is an order block on the 3-minute, I believe. Yeah, so this is an order block. Oops. Which can also act as resistance. And then you have the final gap on the 3-minute here, which is in confluence with the golden pocket, taken from the high to the low. But yeah, it's just ranging. What a move, eh? Shoo. Any thoughts about the head and shoulders pattern? Yeah, I would like that. I think it would be nice. Based on probabilities at the moment, a zigzag to the downside has a higher probability, which means the head and shoulders pattern would quote unquote play out. You would take the neckline but reverse before reaching the target. So it's a fake out of the head and shoulders pattern, which I think would be great. Smilal, hi Koenz, after years in different technical analysis trainings, I'm so happy with your content. Thank you. Your friendly and personal style is so nice, and I'm able to learn so much from you. Thank you so much. These things make me smile, eh? I bet Andy knows all about it. For the ones that don't know Andy, great YouTuber himself. But thanks, Smilo. That's the goal of the content, right? Making people learn something and hopefully give you some insights into what price might do next based on Elliott Waves. So thanks for your message and the effort of writing this in the chat, man, or woman. We don't know, but thanks. I really appreciate it. Always brings a smile on my face, right? The comments. Andy, I'm here to know your Elliott Wave point of view on this. Eaten up all levels to the upside. Monthly rejection 34. Yeah, was quite a big rejection. absolutely. Now I went over the analysis part at like the beginning of the video, like kind of everything, and I have to go in 2 minutes kind of. But at the moment, like let's say, so let's quickly do like a probabilities portion, which is concluding, like based on the analysis at the beginning of the video, probabilities are higher still for a zigzag to the downside, where you're going to be looking for a wave C and an ABC. Main reason is that a flat, both this running flat or the regular flat, like this, have a low probability. Regular flat because of a flat in wave B, running flat, rare in general. Now this move to the upside over here can be counted as an expanding diagonal. Double 1 2 is for me kind of invalidated as a second wave 1 and second wave 2 in a 1 2 1 2 liftoff. Second wave 1 is longer in time and price than the higher degree wave 1, because this of course is high degree 1, high degree 2, low degree 1, low degree 2. But low degree 1 and 2 are bigger in price and time than the first high and 2, which is not what you want to see. So that leads us to a diagonal, but this is an expanding diagonal, hit the target area though. But expanding structures are rare in general. So now we have to wait for a range, and eventually you'd be looking for a move down, a retracement to at least the 05 to the 786, which then leads us to 27.4 to 26K, if this is the high of 5 over here, or you would do something like this, but eventually you expect to move down. But expanding structures rare in general, which leaves us also to the bearish scenario, but it had the same target. So WXY, same target area, flat in WX, zigzag in Y, target area for Y, very nicely respected. Wouldn't really like price to take this high for a wave Y scenario, honestly. Yeah, this can still be an ABC, inside Y, zigzag, move down. But that leads us to the same stuff, right? So of course, Elliott Wave wise, it might sound complex, but basically having a bit of a range here around like between 29.2 and where price is now, see how it forms, and then having a bit of a move down, either for the diagonal, you're going to be looking for a 2, or for wave Y, you're going to be looking for continuation. In both cases, you're going to be looking for at least a bit of a retracement. However, more locally, I personally do expect price to at least fill this wick partially, and test this area again, 29.2, 29.4. A bullish scenario locally is not looking that great, mainly because this wave 4 in blue. So you have a 1 2 1 2 up. Double 1 2 doesn't look too great already, but if this is the high of 3 and this is your 4, then this blue wave 4 retraced to the golden pocket, taken from the low of 2 to the high of 3, which is incredibly rare. However, the quote unquote safe, it sounds stupid, like there's still a probability that this over here is a wave 4, because a wave 4 of a higher degree, being blue, retraces or tends to retrace to the lower degree wave 4. Which it did, because that's this small range in this scenario, and this is then your higher degree wave 4, maybe even finished. But then you would expect a wave 5 up. But just the fact that it did hit the golden pocket does lower probabilities of this being a 4. But it did go to the lower degree wave 4. So it's like lowering probabilities, but there's still probabilities. But yeah, for now, I do think we will at least fill partially, like this wick partially, and then just waiting for a range. That is in a nutshell. And this is of course based on the data and the information we have now. I mean, of course, later on things might change, but yeah, the move up was expected, so that is nice. The target areas were hit for both bullish and bearish scenarios, but now we need to give price some time to range. And then after the range, or during the range, we can get probabilities again. Yo, Queenie Course, what's up? Hi, gracias desde España. Binance 30K as well. Queenie Course, how you doing, man? Hey, Queenie, we're going live now because I got to analyze LTC. Coin coverage, baby. So everyone, I do like to thank you for watching, because I have to do an Elliott Wave count on LTC, Litecoin. There we go. Well, today's Monday. Monday equals coin coverage live stream on for gold. So that's what we're going to do. But that means I really have to go, as I actually have to go live in just a few seconds for gold. And, you know, we kind of went through everything Elliott Wave wise, from the 12-hour to more locally. I hope you found it valuable, informational as well. Next update will be tomorrow morning at 7 a.m. Central European time. So let's see where price is, right? Let's give price some time, let it range a little bit, let it do its thing, and then get back into the probabilities more locally as well on where we expect price to go from an Elliott Wave perspective. Now, that being said, I hope you traded safe, and I also hope you're gonna trade safe, of course, you know, after all this volatility. And I wish you a great morning, afternoon, night, wherever you live in the world. Remark, Ortiz, Anoop, thanks for being here as well. Christian Broncos, everyone. Andy, thanks for popping in. Always appreciate you checking out the stream. And I look forward to your analysis, actually. I haven't checked any YouTube videos so far. So I'm actually interested how other people look at this wick and what their perspective is. So I'm going to make sure to check either your video or live stream, whatever you did. So guys, thanks for hanging out. I hope you have a great, again, morning, afternoon, night, and I'm going to see you at the next one.